All right, we got the recorder going. Okay, retail is definitely under pressure, macro, right? All over the place. Home Depot, Kohl's was brutal today. TJX, our position, we actually, the report was good. However, the stock is down. All right, so let's take a look at Target. Okay, so we're going to start with Target. Target right now is trading 71.80. And what is the expected move here, folks? It's right about $4. Okay, expected move of $4 gives us an expected range of 67.80 up to 75.80. All right, anything on the charts here? $67.80, $75.80. Anything there? Okay, so on the downside, there's probably some Julio, I'll go right back to that. Tony, I'll go right back to that. Probably some support around 66. And then I'd say there's very significant resistance right where the 50 and the 200-day converge, right around 77.70 or so. So let's get this. And so going back to how we got that, so we're right in the middle of two strikes. So if we look at the 71.5 and the 72 straddles, take that and divide by 2. So $4, they're the same divided by 2. I'm sorry. So $4 plus $4 is 8 divided by 2 gives us back to $4. That's really the easiest, quickest way to analyze that. Julio, does that help you out? Shane, what do you mean the 47 cents? Okay, great. Okay, so let's take a look first at an iron condor here. We're looking at basically 68 and 76. What strike were you looking at, Shane? Okay, so that was about $4.10. Less 30 brings you to about 380. It wasn't 47 cents away. It was only about 30 cents away. Stock 71.80. So this is the 69, 67, and 75, 77 iron condor is trading about 90 cents. Probably more like 85 cents, but this isn't really so bad. It's not great. Gives us 68.10 up to 75.90. I don't think it's great. It's not horrendous. Okay. If anything, I'd probably want to lean this a little bit towards the downside. All right, so I might want to lower my strikes a little bit. So let's see if we do that. Still is not going to be great. So this is the 68 half, 66 half, and 74, 76 iron condor. That's closer to 1-to-1, but our break evens now are going to be a little bit shy on the upside. It's going to be good on the downside, but we'd intentionally be creating something like that. So this is, if we could get 95 cents for this, this is really not that bad. Actually kind of like that. Okay, let's take a look at a strangle swap. Going back to the chart here first, though, when we look at this here, yeah, I mean it's ugly, right? It's definitely bearish. I wouldn't say we are completely overly bearish, like I'm not full all out bearish, but if anything, I'd want to lean something to the short side. All right, so let's take a look at just what a strangle swap looks like, which will tell us what volatility is doing for next week. Let's go 67.5. And we'll go 77.5. Actually, no, that's too high. We'll go 76. Okay, so 67.5, 76. Something like that's going to cost around 30, 32 cents. And that's probably, we probably have that priced out fairly here. When I say priced out fairly, I'm talking about in terms of volatility. So if you look at P&L here, you know, it's kind of just right there. It's just even across the board. I would love to see a little bit more profitability there, but it looks like we have volatilities in line here. So I don't see a huge edge there. I do like that the iron condor there. Let's go back to the iron condor for a second and maybe tighten up the strikes a little bit here. So that last one we looked at was the 8.5, 6.5 on the downside. So let's all right, so this is $1.50 wide one. That's just going to be a little bit too cheap for us. I mean, if we could get 70 cents for this, which I don't think we can, this might even be the best one. So let me put this on the board. The 68, 66.5, and 74.5, 76 iron condor. Let's say we could get 70 cents for that. We're now talking about break evens at 67.30 up to 75.20, which that gives us probably the best area of break even in terms of what the expected move is. And if we could get 70 cents for that, now we're up at almost 0.9 to 1 reward to risk. So problem with this is, though, I don't think we can get 70 cents for it. The market is 61.71. But let's keep an eye on this. If vol ticks up a little bit and we can get 70 cents on that, I like that opportunity the absolute best. Okay, so let's move on here. We'll keep target as a possibility. Let me throw this on my alert here. And let's move right on, folks. Okay, we can revisit lows, which we did yesterday. Let's take a look, see if anything has changed today off the heels of the Home Depot earnings. So this was yesterday. And let's put this. Okay, today the expected move is still right there. It's about $5.50. Okay, so we're there, almost the same expected range, 103 to 114. Okay, yesterday we looked at the 104, 102. I know I put 104, 103 up on here, but it was the 104, 102 and 113, 115 iron condor. And that's right at about 90 cents. So today, okay, stock is 109.5 right now. Once again, I'm getting that 4 instead of the dollar sign. Okay, expected range is the same. So what I have up here is the 104, 102, and 113, 115 iron condor for 90 cents. Gives us 103.10 up to 113.90. That's going to be very tight on the upside. Okay, with an expected move of $5, that 113.90 is really, really tight in terms of a break even. So what I'd really want to do is adjust the upside here to 114, 116, which is going to really just make this too cheap. Don't want to sell that for 80 cents here. Scott, maybe more buyers than sellers. Maybe Home Depot wasn't as horrendous. Home Depot's only, it's almost unchanged right now. It was down $4 earlier. So that's probably why Lowe's is up. Okay. So I don't really see anything in Lowe's there. Let's move right on. And let's look at Urban Outfitters. Okay, Urban is trading $26.75. What is the expected move here? Yep, I would agree with that, $2.40. Everybody, Julio, Tony, you guys see how to come up with that? Okay, so that puts us at 24.35 up to 29.15. $24.35 to $29.15. Okay, well, obviously this thing has been just like up and down. The stock has naturally gone through a 2-for-1 split, meaning it traded up as high as 52 in August and is now at 26. So that's not the kind of 2-for-1 split you want to see. I mean, this is ugly. This is really ugly. I want to look here and see in Urban if last earnings they came out and said anything about guidance then. All right, ready to do. Okay, no outlook changes, no estimate revisions recently. Trying to build up their digital presence, which all retailers really need to do. Serge, what are you talking about? All right, so I've got an iron condor here, which intentionally I have this set up with $1.50 wide on the downside, dollar on the upside. That's just not going to be good at all. Serge, can you hear me? Let's take a look volatility-wise what a strangle swap might look like. All right, Serge, I guess you can't hear me, so I can't really help you. This is a 20 cents or so on this strangle swap, and not something that we really want to entertain. So I don't really see anything in Urban I'd want to do other than potentially taking a straight directional to the downside. Let's just see if there's anything from a reward to risk standpoint here that that plays out. And I don't like this 26.24 because the expected move is really only down to 24.5. If we could do this for like 50 cents, that would be one thing. But if it were up at 55, 60 cents, I don't want to do that. So Urban, I'm actually going to take it off the board. I don't see anything there. All right, let me get these videos and these whiteboards posted up here, and I'll be right back, and we'll dive into a couple more. Okay, Serge, are you talking about the webinar for tonight? It's all in that notification. Serge, you see the notice in your announcement tab? Everything is there.